So good evening, everybody. I'm Richard Bowles. Most of you, or many of you, will know me, or having heard me talk at property events live and online. And this is the June webinar for Property Investor News. So I'm just going to quickly do a market update. We've only got one presentation tonight from Ritchie. He's got a wealth of knowledge to impart and answer your questions on property development. So just for those who are new, I launched with a colleague Property Investor News some 20 years ago now, and we offer in-depth market analysis. That's what we do. We interview people, we go to their projects, and we also interview and talk to trade people to get the trade side of the picture. In our website now, we've got over 17,000 searchable articles on all the topics that we've covered over the last 20 years, on all of the main topics that you guys want to know information about. Yeah, so you access those via your subscription password if you subscribe to the magazine. We've got 250 over videos, and if you subscribe tonight, you can get the latest magazine, which is the June magazine. You'll be able to see that. We'll send you 2 more in the post, some back copies, and we'll also send you a complimentary book on buying and selling at auction. So that's the subscription offer if you sign up tonight and let me know. And if you do, then the cost is $8.95 a month. You get the monthly magazine and the webinars. So that is my talk tonight, and thank you very much. And Richie, I hope you're there.
I am here. I am here. Can you hear me?
Excellent. I can hear you loud and clear.
I've been asked to talk about what's next for 2022. What's going on? Okay, you know, we got lots of problems with interest rates, as Richard was just talking about, inflation. So what's happening? Should you get into development? Shouldn't you get into development? I only know about development. I don't know about service departments. I don't know about holiday lets, although I did stay one in last week in the Lake District, which was very nice, I have to say. If that was one of yours, thank you very much. And I don't know anything about, you know, HMOs and all those sorts of things. I just know about property development. I'm going to talk to you for the next 30 minutes about what is next for 2022. I give you my opinion. You know, what should you be thinking about if you are in development? If you're thinking of getting development, what should you be thinking about for 2022? Now, I'm not going to give you lots and lots of graphs and stats and data. I'm going to give you opinion. Okay, you can look at stats, you can look at data. I'm going to give you some opinion. There's going to be some numbers on there, but there is no graphs. Okay, I'm just going to give you some opinion of what I think is happening from what I would say perhaps is a practical sort of point of view. Okay, let's talk about the housing market here. So let's have a look. Currently, these aren't my figures, these are reported figures out. There's 30 buyers for every property on the market. 30 buyers for every property on the market. It's pretty significant. 38% of homes are being sold above the asking price. Now, these move around a little bit. So at the time of putting this presentation together, that's what was reported. And of course, you're going to find other people reporting slightly different figures. But you get the gist of it, you get the flavor and the flow of it. Okay. Also, many people have a bigger budget because they're migrating from cities. Now, Richard was just talking about cities and service departments and people going back to the cities. But when people did migrate from the cities, they got a huge amount outside in the country. I remember years ago, a manager that came down from London. He actually was my local manager in an office in an engineering company, structural engineering company I was at many years ago when I first started out. And he bought a huge house just up the road from the little, remember I said the 2 up, I didn't tell you it was 2 up, but it was 2 up, 2 down, 16.5% interest rate that my wife and I had many years ago, 33 years ago. But this guy bought this great big pad just around the corner from me. It was the biggest house in the area, on the corner, huge garden. He sold his 1-bed flat in London and bought that. It's phenomenal, absolutely phenomenal. No wonder he was quite keen to move out. And so whilst there's a lot of people who's gone back to the city, there's still a lot of people that took their time and have thought about it and are migrating and changing the way they operate. So they're actually coming out of cities. And of course, those budgets can be quite big. And when I talked about downward affordability pressure, as I said, it's met by upward demand. You know, it is met by that demand that is out there. And actually, market sentiment is probably, in my opinion, okay, for house prices to, increases to flatten out with little prospect of a housing crash. That's my opinion, from what I read and from what I see. Okay, so it might flatten out a little bit, but a major crash, I don't think so. I don't think so. Okay, take Richard's point about absolutely, if there is, make sure you're prepared for it. Make sure you know when it's coming, because there are some great opportunities when it does for developers. Okay, many a developer made a killing in 2008 when the market dropped. You probably heard the saying, you know, you make your money when you buy. Have you heard that? Yeah. Well, those in 2008, when the world was running scared, I just sold a company out in 2008. I remember April 2008, I sold was a structural engineering company that I own. I sold it out to a large company called Capita for a 7-figure sum, quite a healthy figure. That's why I retired 2 years later. And he said, you know, I wouldn't have bought this now. 2 weeks later in the corridor, he said, I wouldn't have bought it now, because the world changed, didn't it? Do you remember? Those that are around in 2008, it changed very quickly as we went through 2008. But developers made a lot of money in that time because they got in and they bought. So definitely something that Richard said earlier, if you were on at that point listening, is identify if there is going to be a crash and make sure you are positioned properly. Now look at these stats, a few figures here. I said I wouldn't give you too many stats, but look, these are straightforward. The government is targeting 300,000 new homes a year. 300,000, that's a lot of new homes. Guess how many we're delivering, if you know? Do you know? Does anyone know how many we're delivering? Just short of 200,000. So there's 100,000 homes a year. So in fact, 300,000 a year needs to go up, because they've got to take account for every year that we don't deliver 300. But they still maintain that they're targeting 300. I saw a 350 the other week, but actually it's probably a lot more than that. Targeting 300,000 new homes. We are falling massively short. I said there's 30 buyers for every property available. So we are falling massively short in the delivery of stock. Okay, product, if I could call it that. Maybe there's a reason why in a minute. Now let's just note this, 1.1 million, I think it's about 1.3, new homes available through brownfield development, through existing sites, through existing buildings that can be converted. Look at that. That is, you know, 4 years worth of stock totally available. And interestingly, that brownfield development is of no interest to large house builders. Your Barratts, your Persimmons, your Bellway, they're not interested in that. They're not interested in converting existing buildings. They're not interested in, I'm going to talk about it in a minute, permitted development rights. They're interested in big fields that they can put 200, 300 houses on. They have a cookie cutter model. They have, you know, what do you get? I mean, you can go to Newcastle, you can go to Plymouth, and what do you get? You get the Balmoral, you get the Ambassador, you know, and they're the same houses. That's what they deliver. They don't have the ability, the structure, the setup, the vision, perhaps one would say, maybe the financial structure to actually deliver conversion projects or smaller units. Yet brownfield is perfect for SME developers. So if you are an SME developer or you're thinking about becoming a developer, then they're perfect for you. They're smaller, they're quicker, they're easier. So just think about this at the moment. 300,000 houses we're targeting, we're only getting 200. So there's 100 short. And did you know, you might have done, you might not have done, I don't know, over 30% of those 300,000 houses, or the houses that we did deliver, and it was never 300, was delivered by small scale property developers. That's fallen to way less than 10%. A lot of them have disappeared out the market. This is why the government is trying to encourage SME developers to come back into the market to help deliver that stock. And tell me if you know of another business where if you develop a product, and that's why I said I'm going to call it a product, it's a house, okay? But it's a product, it's a business, that's your product, that you can sell them. You know, if you go and develop a widget of whatever description that widget is, do you definitely know that there are buyers waiting and queuing to purchase that? Do you know that marketplace is out there for sure? Well, we do if our product is houses. Provided we're building the right type of houses in the right area. And Richard talked about some graphs and sectors and areas you should build in. You need to know a little bit more about it.
Yeah, great. Okay, that's it for tonight. Thank you very much, everyone. Thank you, of course, in particular to Ritchie Clapson. Okay, property investing.
Well, Richard, look, thanks for having us on. It's been a pleasure, and thank you everyone for listening. I've enjoyed it, and hopefully we've given you a bit of an opinion of what's next for 2022 for you.
Yeah, thank you to everyone, and good night.